Hello students, you're watching Reflection Data Services online learning platform. Learn it ease from your super favorite teacher, Deepa Sridhar. In today's session, let's look into partnerships, profit and loss appropriation account. Every business will want to identify whether they've made profit or loss during the year. To do this, they prepare a profit and loss statement. What's a profit and loss statement? When you deduct all the expenses incurred during the year from the revenue earned during the year, you identify the profit. Now this is partnership. We already saw the accounting perspective of partnership is that partners are treated different from the firm. So the profit which you calculated in the profit and loss account is the profit earned by the firm. Now once that is calculated, the next step is to identify how much of that capital will be distributed amongst the partners. Is there anything which is payable to the partners like salary, commission, interest on capital, or is there a deduction in the form of interest on drawings? So all these are not an expense to the firm, which is a deduction in the profit and loss account. We call it a charge on profit. But these are appropriation and adjustment after the profit is found out. So we prepare a separate account called profit and loss appropriation account to do this. It's only prepared by the partnership firms. It clearly shows how net profit is appropriated, meaning to say distributed amongst the partners. So this is the format of a profit and loss appropriation account. Profit and loss appropriation account is an extension of a profit and loss account, so it is a nominal account. Expenses are debited, incomes are credited. So as a first step, bring down the profit from the profit and loss account and then start making your adjustments. So profit is brought down to the credit side. If at all there was a loss, it would be brought down to the debit side. What are the adjustments we make? The adjustments made are interest on capital, salaries made to the partners, commission, any adjustments to the reserves, and then interest on drawings. We should clearly understand the difference between charge against profit and appropriation out of profit. When I say charge, it becomes an expense of the firm and the deduction is happening in the profit and loss account itself. So expenses to be deducted from revenue to calculate profit in the profit and loss account. So the recording will happen in the profit and loss account. So what happens is, because it's a charge, irrespective of the firm making the profit or not, that expenses would be recorded. It could be interest on partners' loan, rent paid to the partners. These are all examples of charge. But when it comes to appropriation, it is debited from the net profit to ascertain the divisible profit which has to be distributed to the partners. So appropriations can be made only if the firm has a profit. If the firm doesn't make a profit, you cannot appropriate. So examples of appropriation are interest on capital, partner salary, commission. So I'll take you step by step through the journal entries for profit and loss appropriation account. The first one is to bring down the profit from the profit and loss account. So profit is a credit entry. So credit it in the profit and loss appropriation account. See, it's highlighted in the red color. Profit and loss appropriation account is credited by the profit from the profit and loss account. So what would be the entry? For transferring the profit, it would be profit and loss account debit to profit and loss appropriation account. For entering the transferring of losses, it would be the reverse. It would come in the debit side. Losses will be debited. So it will be in the debit side. Profit and loss appropriation account debit to profit and loss account. Let me start explaining the journal entries for interest on capital. I would give you a small hint. All that which is paid by the firm from the profit to the partners will come in the debit side. Expenses are debited. All that the firm collects from the partners will come in the credit side. So interest on capital is payable by the firm from the profit. So it's an appropriation. It's an appropriation which is recorded in the debit side of the profit and loss account. So the double entry will be on allowing interest on capital to partners capital account. It's supposed to be credited to the partners capital account. On closure on interest on capital, profit and loss appropriation account debit to interest on capital. Next is interest on drawings. Interest on drawings. The partner has withdrawn some amount of profit from the firm. So we recorded it as drawings. If the firm is going to charge any interest on that drawings, it becomes an income to the firm. Income to the profit and loss appropriation. So we need to credit it. Credit the profit and loss appropriation account. So the double entry would be partners capital account will be debited. Decrease the partners capital account. So debit the partners capital account. Partners capital account debit to interest on drawings account. On closure, interest on drawings account would be debited and profit and loss appropriation account will be credited. When it comes to salary and commission, partners sometimes are eligible for some kind of salary or some kind of commission for the work they've done for the firm. So this is also a part of appropriation. It would not come in charge against profit. So from the point of view of the firm, this is what the firm will have to pay the partners. So it would be in the debit side of the profit and loss appropriation account. So for allowing salary and commission, partners salary or commission account debit to partners capital account. Credit the partners capital account because it's going to increase by that value. On closure on salary and commission, debit the profit and loss appropriation account, credit the salary and commission account. So profit and loss appropriation account debit to salary and commission account. At times, firm will not want to distribute all of its profit with the partners. There might be some requirement for certain reserves. So when the firm decides to transfer a part of the profits to the reserve, it would be a part of the appropriation account. So it would be a debit entry in the profit and loss appropriation account. So the double entry would be profit and loss appropriation account debit to reserves account. Part of the profit transferred towards the reserve. So once all the entries have been recorded in the profit and loss appropriation account, total of the debit side and the credit side. The difference between the credit side total and the debit side total gives you the divisible profit. And that is the profit which has to be transferred to the capital account of the partners. So for transferring the divisible profit, which is the credit balance, the double entry would be debit the profit and loss appropriation account, credit the capital account. Profit and loss appropriation account debit to capital account or current account of partners. Hope you've understood how to prepare a profit and loss appropriation account and record the journal entries and calculate the divisible profit and distribute it to the partners. In my next session, I would be helping you understand to compute interest on capital and interest on drawings. In case of any clarification, doubts or inquiry for online classes, you can connect me at reflectionsedu@gmail.com or WhatsApp me at 9790 604 789. Happy learning!